Hello and welcome. So today obviously is a Sunday night and we have the England versus Senegal match coming up in 1 hour. So I'm very excited about that. But it's been quite a long day. I'm feeling a little bit like a wish.com version of myself. Please don't demonetize me. No, not throwing any shade on Wish. But anyway, the key thing is I want to update you guys. What are we looking at for next week coming up? We have a massive week and I'm excited about Chainlink. I actually am because they are launching some staking. Let's jump into this and have a little bit of a closer look. I'm going to try and keep this relatively quick. We'll come back onto the economic calendar later, but I'm going to start with non-whale Bitcoin investors. We covered this a couple of, I want to say last week, week before, something like this, but we're seeing lots and lots of data that from shrimps and crabs, and now we're looking at entities holding between 10 and 100 Bitcoin and now starting to buy the dip. So we saw that buy the dip mentality from those shrimps and those crabs, people who have less than one Bitcoin or just over. And now that's spreading kind of like a good contagion. There's been a lot of contagion in the negative way, in the sense that because of FTX, because of the uncertainty, because I'm sure there's going to be a couple more that suffer the fallout. BlockFi was only the first, or the beginning, I should say. So we are now seeing from CryptoSlate showing that numbers of Bitcoin wallets holding 10 to 100 Bitcoin had their supply rise by 2.98 to over 3.26 million coins between 18 and 22. And so this kind of shows us quite a nice little graph here. And so, like I said, we did go through, we showed you something very similar, but as the price is dropping, and you see, this is kind of the massive drop that we're seeing here. Maybe I can click on this. No, Glassnode never let me do that. Not fan Glassnode, although great work. Just let me click on the picture. I want to zoom. I want to get that inside, all up in me. And so as we're seeing the price drop, people are buying the dip. This is very, very good. But the thing that kind of worries me is that we're not seeing major investors buy the dip just yet. Okay. And I think they're doing something different. Okay. I think they're staking. And I think they're choosing Ethereum over Bitcoin. Maybe it's because JP Morgan are in bed, pretty much like they own the bed, with the like consensus, who pretty much like write a lot of Ethereum contracts and do a lot of, should we say, behind the scenes work for Ethereum. And you guys can clarify that. I'm not going to go into exactly what they do and what consensus do or don't do and how JP Morgan are close. I think I've done a video on that before. If not, if you do want me to do that, drop a like on the video and also comment, and I will do one for you exactly how intertwined they are. But everyone kicked up a fuss because JP Morgan are like, man, we hate Bitcoin, but we're going to buy up consensus. So that was a bit crazy, but we are seeing a bit of a buy the dip mentality. This is really, really good. We like to see this. The Bitcoin community is going strong, and this is something we really, really like. Now I'm going to move on to Chainlink. This is going to be a quick one, guys. So coming up, Coin Market Cal. This is a calendar. What's going on? I can show you other like projects. Mainly, I'm just going to keep this high level, right? There's a lot of events going on. It's quite nice, actually. Maybe I will go back just to show you the different type of events. So if you are interested in a coin, I highly recommend that you use this, or just click the follow button, subscribe to the channel, and you will be able to, have us update you. But we're looking at, different events. Web3, Impact the Future, deployment update from Lisk, but, community calls, soft fork activation for Ergo. Again, some of you guys might not, these are not the top projects, so might not have heard too much about them, but we've all heard about Chainlink, right? Chainlink, we like Chainlink. So this is their launch of their staking, okay? And we can look further into this. This is basically just, what's going on at different times, okay? So, you can see here, Illuminate. But this is the main story, okay? So we're looking at Chainlink could surprise a Chainlink price could surprise Link holders as it prepares for staking on Ethereum. This is very, very good. We like this. Okay, so as we all know, it's an oracle. Fantastic. Basically, kind of helps in a very simple way merge, yeah, or help the different chains work towards the same goal, or in kind of connect. I know it's an oracle, it's not as simple. Again, I'm keeping it quick. So anyway, Chainlink's initial plan for staking was to lock Link tokens for 12 to 24 months. The team announced an update with more frequent releases because, again, the same thing, where everyone was worried about SBF and FTX going, down the toilet, and people were worried about Solana because a lot of Solana is held by FTX. And so if people start selling off FTT and then disassociating themselves from FTX, people were worried about Solana because with staking, it's like a train. The train is going, you can get on and off at a certain stop. You can't get off halfway, right? Because well, you probably could, but you might die. Never jump out of a moving train. That's my advice. But the whole point of this is that, if you are locked in for 12 months and something starts to go wrong, then everyone's going to start panicking. And then as soon as there is that, release moment, everyone is going to try and jump ship. And so this isn't, what we like. So having these more frequent releases is a very good thing. The price has surged 22% in the past 2 weeks. And I think it is because of this. Again, I don't want to go into too much detail about this. If you guys want, again, comment. I'll do a full video on exactly what this means. It is coming up tomorrow, though, I believe. Let me just scroll down. No, in 2 days' time. On Tuesday, I should say. But anyway, so this is a little bit technical analysis. We are down at these very, very much like low levels for Chainlink, and I'm not going to do a full bit of technical analysis because like I said, we're going to let AJ do that. But anyway, so Chainlink, this is very, very good news for Chainlink. I think we could see a massive boom. And the reason why, I think we're also going to see a lot of piggybacking, when we move into staking, especially at the moment. If you stake, you get, quite a good return, actually. And it's relatively consistent, okay? It's a bit like mining Bitcoin, right? Because you're going to get a certain amount of Bitcoin. Yes, the price might fluctuate of that Bitcoin, so it might not be worth as much, but you're still going to get, a coin and a certain amount of coins guaranteed to a certain degree. If you got a supercomputer, then it almost is guaranteed. Solves those algorithms quick, boy. But anyway, so we're looking at this. So demand for liquid Ethereum staking options continues to grow post-merge. This is where I mentioned about institutions, guys. So yes, we're seeing the smaller boys and girls accumulate Bitcoin. I think what we're going to see is some of the smart money moving into staking, becoming validators on the likes of the Ethereum network, and creating their own nodes, okay? A few key points here is over 15.4 million Ethereum is locked in Ethereum staking contract, which values the total staked Ethereum in the top 6 cryptocurrencies by market cap alone, which is mental. Just the staked Ethereum alone is worth, well, it brings it into the top 6. That is crazy. And this is why I think there is such a really a good future for the likes of these different coins that are providing liquid staking options. We know that institutions love it. Institutions want to get into crypto. They are excited about it, but there's too much risk, especially if you've got a 24-month lock-in period, like Chainlink we're possibly suggesting. I'm glad that they are changing that. But anyway, this just goes on to say, they used to be miners, now they are validators, but again, you get rewarded for maintaining the network. Fantastic. Currently, looking at staked ETH Lido, you guys will absolutely remember Lido. Hello, Luna. Whoops. So Lido staked Ethereum pool dominates the space with almost 80% share of the total market supply of staked ETH. Staked ETH has also seen a 127% increase in average daily trading volume since the Ethereum merge. And again, as something that we mentioned on this channel, when the Ethereum merge was happening, that we are going to see a lot of people getting interested. Primarily, I think it's going to be the institutions and more of the smart money. I personally believe the hodl method of building your crypto portfolio is a little bit dead. I think it works really, really well for those smaller projects, maybe some that are looking to kind of catapult, do the 10x, the 100x. They are harder to find. They're less frequent now, but there are still some. And I think the hodling method does work for those. But when you look at the likes of Ethereum, yes, you can hodl, but is it, you're not really getting the same returns as you once were, okay? I don't think we're going to see Ethereum do 100x in the next, I don't know, I'm going to even say like a couple years, okay? Maybe even so how much is it now? Currently, Ethereum is at like 1,200, I believe it is, around about this. So to do 100x, that's got to be over $100,000 for an Ethereum. So I think we're still a couple of years away from that, okay? So that whole hodl doesn't really only work, I think, when there are so many better trading opportunities in between, or you could just stake it. But one thing, again, that really validates my point here about the whole institutional method is we all know Coinbase was selected to be basically the institutional broker. We'll call it, not exactly the correct terminology, but they released their institutional services. Now, have a look at this. Coinbase's CB ETH, kind of like staked ETH from Lido, has surpassed all other assets besides staked ETH in supply, despite having only launched in August of 2022. And this is where everyone was getting excited. You remember this news from Coinbase, hey, we're going to be working with institutions. We're going to offer this. We're going to offer custodian services. And so they have grown to a monumental level, especially since August. And this shows after the merge, there's so much interest in staking. Yes, I will say staking has taken a massive hit. We can just look at this. Total value locked, just over 40 billion, which is actually, pretty shameful considering at one point it was like nearly 200 bill. As well, 170, 180, 180, whatever. So around those times, obviously everyone's very excited. Everyone's like, oh, I'm going to lock it up. But then, things happen. Things happen. Luna, FTX. But again, so, we can have a look through Ethereum. And I believe, we will be able to check on Chainlink. We won't be able to at the moment because, it's the 6th. But and it's not the 6th today. But we'll be able to follow this, and actually just go through. And I do quite like doing this. You can see here, obviously, Lido here, Curve. That again, that was, which one was that? That was Celsius. Yeah. Big up Celsius. Fantastic. But I think we're going to see a general trend kind of accumulating here. Okay. So even as, the bull run begins to happen, I think we'll see a lot more money coming into staking because it's like a nice way of dipping your toes in the water, shall we say. You're not getting fully wet and, maybe you don't have the right trousers on, but you can get your toes wet and do a bit of staking and see how that works for your portfolio if you're an institutional investor, but you still have the option to be able to sell relatively quickly. And also, you're not open to as much market risk because if you hold a coin and it drops, you're just left with whatever is left. Okay. But if you're staking, you're still taking some rewards as it drops, which is, a silver lining to a great cloud, shall we say. Anyway, this week in crypto, what are we looking out for? I know I'm saying this week in crypto, I'm talking about financial markets here, but it's going to affect crypto. We all know this, okay? So ISN, non-manufacturing, this basically is they go to the non-manufacturing people and they say, how many jobs do you have? Okay, you have this many. Fantastic. And are you seeing any weaknesses? What are your problems? And so they come out with like basically like just a number to be like, what's the health? Is it good? Are we happy? Anything above 50, pretty good. But we are expecting a drop, okay? So this is going to be kind of services, should we say. So like I said in my previous video, goods get hit first, and then the people who make the goods, i.e. the services, they then start to fall. So we will see that drop, and that's expected, not a bad thing at the moment. It is going to, it's a bit of a sign of a recession, but not completely yet. Bit of like non-news, maybe a bit of strength in the dollar coming up to the 7th of December, where we see GDP growth from the euro. Maybe people want to mitigate a little bit or hedge their risk from exposure to euro by buying some dollars because there's not any major news on that day from the dollar. So people might be hedging their risk and moving some money into the dollar, hence the DXY would go up. But the DXY is looking quite weak at the moment. And I think this is going to be overall, we did have a strong jobs report, which is not good. Well, it's good for the US economy, but and therefore good for the DXY, but bad for the Fed. And obviously, all hail Mr. Jerome Powell. We love you, Powell. We do. We love you, Powell. We do. We love you, Powell. We do. Oh, you didn't pump my crypto. I shouldn't be doing these at 10 o'clock at night, should I? I need to get some sleep. Anyway, so PPI coming out on I believe that's that Friday. That Friday? It is Friday. So coming out on Friday, we have the PPI month over month from the US, and this is the producer price inflation. So we have consumer price inflation and we have producer price. Ideally, like this tells us about like how much stuff costs. So raw materials and all this type of stuff, we can have a good idea about that. Again, that's not really going to affect us as traders or even anyone in the crypto market as much. It will give an overall idea about the US economy, but not specifically crypto. And then the Michigan consumer sentiment, they just basically call you up and they're like, how do you feel about your money? Are you rich or are you poor? So they're anticipating a higher number, which is good. So they're anticipating that, people are going to be like, hey, Mr. Because I'll show you here. They call households um, consumer expectations. Each month survey contains 50 core questions. Of consumers' attitudes. Yeah, American households. There you go. So not Alaska, not Hawaii, because I don't know. Imagine maybe prices are just mental there, but they basically call up and they're like, "Hello, do you want to take a survey? Maybe they get paid for this. Maybe I should sign up." Yeah, yeah, no, American bread is well expensive at the moment, sitting here in Dubai. But anyway, so they just they call them up and they say, "Look, how do you feel about your expenses? How do you feel about this? How do you feel about everything else?" And so this then gives an overall number, and they say, "Okay, we feel good, and so therefore the consumer feels good." But again, we want this number to drop because we don't want the consumer to feel rich. We want them to feel poor. We want everyone to be homeless. We want everyone to have no jobs, because then the Fed will feel happy and then they will finally stop raising rates at such a crazy, crazy amount. But I did do a video a couple of days ago where I mentioned that might not be the case. They might have to rapidly reduce rates to avoid a very sharp recession. Again, if you want to view that video, go back, have a quick look. I believe it was 2 days ago. But anyway, and then finally, we're going to finish up here. I'll just refresh this. Hit me up. Is it going to change? I don't think it is because it's a Sunday. So we're looking at a 75 basis point hike, 21% chance, or almost 22. And then a 50 basis point hike has a 78% chance, which is pretty good. So we're liking this. But Jerome Powell has always said, look, guys, anticipated, we're going to have a lower, less aggressive rate hike. But the duration of time for how long we're going to have those is still undetermined. So we're basically anticipating lower rate hikes for a longer period of time. So away from the 75 into the 50 basis point hikes, but again for a longer period of time. So it's not going to be good. But overall, we're kind of anticipating, I think maybe it'll peak in May or June. Yeah, so getting up to like that 5%. So we'll see how this goes. Hopefully, then, if we have a 50 basis point, then we have a 25 basis point, as we see here. Then we have another 25 basis point. And this is the thing. So we're like reducing the severity, but increasing the longevity. Because some people are saying, look, you need to stop raising rates now, and even start cutting them very soon. But I don't think that's going to happen. I think this is fairly accurate. I'm in this camp. But anyway, I'll have a quick look in the comments. Hello, guys. Hello, Angela from the Philippines. And then also, hello, Mr. New Creation. Guys, that was everything from me, really. I don't want to, blather on for too long. Thank you very much. I'll keep you up to date with the Chainlink, potentially do a full video on exactly what that means for anyone who does want to see that. And obviously, we'll keep you up to date with everything in the crypto market. But until then, I'm going to go watch the football. And did you hear that? Someone said it's coming home. It's coming home. It's coming home. Just a stupid guy on the stream. English guy, I should say. Anyway, thank you very much, guys. Like the video and also subscribe to the channel. Thank you for watching. See you.